Good afternoon and welcome back everyone to the Moneycontrol live stream. You're watching Markets with Santo and CJ. Well, it's been a great day if you're a bull and not so great if you're a bear. If you look at our market, it seems like we are ending the November derivative series on a very strong footing today. The Nifty and Sensex are just inches away from the lifetime closing highs as well as lifetime all-time highs as well, largely on the back of what seems to be a little bit of short covering from bears today. If you look at the 18,300 call option, a lot of the call writers there have been struggling to cover their position, Santo, and that has been one of the reasons why we have seen the spurt in this market, and we are now sitting quite handsomely above the 18,400 mark. So that is a very good indicator. Of course, major reason why we are scaling that also is the Nifty Bank Index that has scaled 43,000 for the first time ever, sitting now at a new record high. And globally, if you look at the US dollar index, that has continued to weaken, clearly aiding the sort of rally that we are seeing in emerging markets equities all across the world, including at home, Santo.
Well, there's a good probability that the Nifty could take out its previous all-time high. But at the same time, the fact that small and mid caps have been underperforming, that is a telling sign of the absence of retail investor activity. Now, it just reminds me of the rally back in 2009-10. In fact, in 2008, you had seen the market collapse quite dramatically. And then it went down for almost the next 1 year.
Right.
But between then 2009 and 2010, the market began to rally. But again, it was a very narrow rally. You could see that indices were moving higher, but at the same time, most stocks were pretty much where they were.
I think if I'm not wrong, Nifty rallied about 65%. I think in that 1 year.
In 2010, so it had made a new high, but it really didn't mean anything because investors were not making any money.
Absolutely.
And then also remember, CJ, after that, the market then went into a downturn for almost the next 3 years. So this, I know that the past doesn't exactly repeat itself, but there are certain pointers that we could be very mindful of.
True. I think this is something sort of a replay of what we were seeing earlier in the year as well, when benchmark indices were holding quite firmly, but it was the mid and small cap space where a lot of the underperformance was happening, and that is why you saw the sort of the withdrawal of feet from the retail investors in the first 6-7 months in this market. And also, while Santo, I take your point that mid and small caps are underperforming the past 1 month, but let's not forget that the rally from June till September that we saw, actually small cap and mid cap stocks at that point of time were leading that rally, and it was the Nifty 50 that was underperforming. So one could argue that probably the Nifty is just catching up to the the outperformance we had seen from the small cap or mid cap space. But clearly at this point of time, one thing is for sure, that these gains are quite narrow and they are not as widespread as a lot of people would have you believe.
Well, at a quick check on the F&O cues, now we're seeing long build-up in futures of Apollo Hospitals, GSPL and Birla Software, and we're seeing short build-up in futures of GNFC, Idea and Sun TV.
Well, thank you for those F&O cues, Santo. Moving on, the top 5 stocks that were on our radar today, these were buzzing in trade, and starting off from the travel space.
Yes, it's Rategain Travel. Now, the stock is a play on the revival in the travel and hospitality space. It's a software as a service provider for this industry. Now, it's got 3 main streams of revenue. One is the data as a service, the second is the distribution, and third is the MarTech, where it manages the social media for all the hospitality industries. Now, pretty strong, the growth in all 3 segments has been fairly steady. In fact, in the first half of this year so far, overall revenues have gone up by almost 52%. So clearly, Rategain is clearly benefiting from the uptick in the travel and hospitality industry. Now, that said, the company has been very cautious in its guidance. Despite the strong momentum, it is guided for just about a 30% growth, and the street is of the view that it can easily beat those. Now, lastly, the revenues of Rategain are also recurring in nature, almost 99% of that, and only 23% of the revenues are transaction based, which means that they depend on the volume of traffic. So this is one stock probably worth keeping an eye out for if you're convinced about that the recovery in the travel and tourism industry will sustain.
Well, Santo, I think clearly it's a great business, especially if you're a subscription business. That generally tends to be a very safe bet because your revenues clearly become annuity and therefore there is less instability in those earnings. That's it, Santo. I think as far as the FY23, although a lot of people would probably bite your hand off for 30% growth, but you are suggesting that that's a cautious view from the management. But even for the outlook beyond FY23, I think they had expressed a little bit of caution there as well, and that is something that is a little remarkable given the fact that it's probably indicating the fact that while the going has been great in FY23, aided of course to a large extent by the pent up demand that their clients are seeing because of huge travel all over the world, also in India as well. But clearly there is a possibility that that pent up demand will start fading by the time we are here next year same time, and that should probably mellow down overall growth for Rategain as well, as the growth rate for its own clients will also mellow down. But if you keep the fundamental aside, you look at the technical side also, Santo, there doesn't seem to be too much of an enthusiasm at this point of time for the stock. In fact, the stock is actually exhibiting a lot of weakness on the technical charts, with the counter now trading below its 200-day moving average, which clearly is not a great sign if you're a bull on this counter. So there is a good possibility that you could see some bit more of a weakness continuing going ahead. But overall, clearly this is a great business to have. Well, Santo, moving on, the first stock on my radar today is from the IT space, Newgen Software Technologies. Now, this is one stock that, of course, when its IPO came out, clearly was among the favorites in the market, and then it fell off a cliff, largely in line with what we were seeing in the information technology space. But earlier today, IDBI Capital came out with a very bullish and a very contra call on this stock. They have given a buy rating to the counter, and they believe that almost 60% of Newgen Software's revenues are actually annuity revenues. That means they are very, very recurring revenues. There's no instability in those revenues, and the large exposure that the company has to the BFSI sector in general in the export market, that should also provide some bit of immunity to the overall macro issues that has been one of the reasons given as one of the reasons why tech earnings or tech stocks have been taking a beating in 2022. Apart from that, going ahead, IDBI Capital is expecting about 16% annualized growth in sales for Newgen in the coming years, and that is one of the reasons why the brokerage firm is expecting about 30% growth in the stock over the next 12 months, Santo. So clearly, if you have the heart for it, IDBI has the right stock for you at this point of time.
Well, steady performance there. You mentioned the annuity part, CJ, but here's the rub. Now, the stock, if you look at the company's earnings over the last many quarters now, almost between 2019 and 2022, even adjusting for the COVID year, and that adjustment would not be fair because you saw other software companies doing quite brisk business. The increase in revenue has not even been about 50%. It's been less than 50% over the last 3 years. That's one. Secondly, CJ, the margins, if you see, there's been a near collapse of the margins in the first 2 quarters of the current year, and that is something also which the market seems to be very worried about. Margins used to be about 30% during the quarters of last year, and in June quarter this year it was about 16% or 10%, or it's improved to slightly to about 16%. Steep drop there. So I think that is a big concern, and the steep fall in margins coming at a time when your top line actually is not growing by leaps and bounds perhaps explains the fact that the stock is down by more than 50% from its record highs. Well, next stock on my watch list is Apollo Tyres. Now, the company is looking to improve its operating margins, and it may get some leeway there, mainly some favorable tailwinds in the form of lower input costs, and besides the fact that the company is also adding a lot of value added product. Already in the premium radial segment, it has improved its market share considerably to about 42%. The company's management was on the CNBC TV 18 channel today, and they've also said that Redestine, the tires that they've launched in India, that is getting a pretty good response at this point in time. Besides that, the overall outlook looks quite positive. 12% is the margin that the company is aiming for, and they should be able to get it. The company's revenues have been growing consistently due to the easing of supply chain pressures in the auto production side of the business, and with demand also being quite steady clearly tire companies are set to benefit from this uptrend.
Santo, as far as of course the the new products that are concerned, clearly there is a lot of benefit there in terms of value-added products. But as far as input costs are concerned, I'll still be a little cautious, given the fact that, as I mentioned, in our morning show as well, that there is a good possibility that crude oil prices could see a sharp comeback next year, and therefore I would not be so sure that input costs, for tire companies, of course, rubber costs go up because of higher crude oil prices. I will not be that sure that input prices will come down substantially. I think they will remain quite elevated over the next 6 to 12 months for a company like Apollo Tyres, and therefore any benefit on the margin would probably be limited, and I don't think it will be as great as a lot of people are expecting it to be going ahead. Well, moving on, the last stock on my radar today, and is a newbie, of course, in the stock market, has recently had its debut, and that is Bikaji Foods. Now, the stock has actually gone strength to strength ever since its listing. Of course, it had a pretty spectacular listing on the Lal Street, and since then, it has risen another 10 to 15%. Today, the stock is higher by about 7 to 8% itself, clearly indicating that investors are smelling strong earnings growth potential from this company going ahead. Also, another factor that is aiding the rally is the fact that one of its actually industry peers, actually Santo, in the ethnic brand products is Haldiram, and Haldiram apparently is also mulling an IPO very, very soon, and there is a murmur within the market that probably Haldiram's listing could be at a much higher valuation than what Bikaji had seen, and therefore, given that they are of the same industry, a lot of people are expecting that Bikaji's valuation also could see an upswing as we inch closer to the potential IPO from Haldiram Group. So it will be interesting to see if that happens, but at this point of time, clearly the market is appreciating what Bikaji Foods is presenting in front of them.
Yes, a bit of trivia. The promoters of Bikaji and Haldiram are related. Were you aware of that? That's one.
Interesting.
That apart, CJ, a couple of things here. One is that the company, Bikaji Foods, appears to be chasing top line at the expense of margin. Probably that explains the fact that last 3 years revenues have grown by about 21% compounded, while the growth in net profit has been about 16%. That's one thing. But even the bigger thing about this rally, what catches my eye is that it does look like a classic operator operation at this point in time.
Okay.
Now, if investors were really enthusiastic, if there was some huge pent up demand, typically that comes in the first 2 days of the trading of the stock. Now the stock came out with an IPO at about 300. First day, I think it closed at around the 370 odd, which was just a modest premium. I would say 6% is not really big in this kind of a market, considering.
Yeah, I think it closed considerably off the day's high. I think
that is one. Again, on the next couple of days, it was actually going down, and then suddenly, the stock takes off. It has fallen to about 310, and then investors probably realize that, hey, this is a great stock, and I think we should all be buying into it en masse. Volumes are low initially because it looks like most of the floating stock has already been absorbed. So, CJ, this is a stock, maybe the fundamentals are strong. I mean, I won't really dispute much on that, but at this point in time, it looks really risky the way the stock has taken off, CJ.
Well, Santo, the stock is now at a upper circuit, clearly locked in at 10% higher today. So looks like a very, very strong day for Bikaji
Doesn't look
Foods.
like anybody has got stock. That could be the other explanation.
Possibly. Of course, I mean, once you hit circuit limit, clearly no orders will be processed on the exchanges. So that is that for Bikaji Foods for today. But let's see how the day opens tomorrow.
Well, last stock on our watch list is GSPL, Gujarat State Petronet, which specializes in pipeline infrastructure for gas companies. Now, this stock has been one of the big gainers today, up close to about 8%, and this follows the new pipeline tariff structure that has been put in place. The pipeline tariff structure has been designed such that so as to increase the penetration of gas all over the country. Now, two key things which are expected to benefit the pipeline infrastructure companies like GSPL and even GAIL for that matter. Basically, it is that earlier when you expand capacity, you have to pay tariffs on that almost immediately. Now there is a leeway of about 5 years. You've been given a gap of about 5 years, after which the new tariffs will be imposed on the additional capacity. The second point is that till now 50%, whenever you increase again capacity beyond 10%, 50% of the incremental revenue tariff, this thing had to be shared with your customers.
Right.
That has now been done away with. So, two key points here in favor of pipeline
GSPL,
infrastructure companies, not
Yeah.
just GSPL, but
GAIL
also
India as well.
GAIL India as
Yeah.
well. But GSPL is the gainer today, and that's why we are talking about the stock.
Well, Santo, I think if you look at, of course, that new pipeline structure or tariff structure clearly is a booster for GSPL. But if you look at what has happened or what is happening to company as far as the earnings are concerned, not much of confidence coming there. If you look at the first half of FY23, clearly volume growth momentum has been quite muted for the company, and there is a possibility that that momentum will also continue for the rest of FY23. So while the pipeline tariff structure will be a long-term positive, I think in the near term, clearly concerns remain around volume growth for GSPL. Also, because of those lower volume growth, numbers and the outlook, a lot of brokerages have actually ended up trimming their FY23 earnings estimate for the stock, and that is one of the reasons why, even though the stock had seen a spurt, on Monday, when of course on the back of the tariff structure news, it quickly gave up a lot of those gains. Now it seems like it is now done with that consolidation, and we are seeing a renewed up move on the stock. But I'm still not confident as to how soon this will reflect on the earnings of the company. I think we will still have to wait till FY24, maybe FY25 to see the actual results of the tariff order. But till then, the focus at this point of time on the FY23 earnings seem to be quite cautious.
And with that, let's have a quick check on the markets. Indices continue to hold strong, CJ, although the advance to decline breadth has changed considerably. It's about 1600 stocks now up, and about 1100 stocks down at this point.
And Santo, clearly, I think what we are seeing right now is that once we were above the 18,300 level, clearly a lot of the call writers at 18,300 were forced to cover their positions. That led to another 100-point move, and we moved about 18,400. Now, as we inch closer to the expiry time, 18,400 call writers, which also had more than 1 million open interest, Santo, they have now been forced to cover their position. That has resulted in another 100-point up move in the index, and that is why the reason why you're seeing the Nifty right now edging above, almost on the tip of 18,500 after what has been a 13-month wait, Santo, for Nifty to reach these levels. The last time we were around these levels was October 18 or October 19 to 2021. So it's been more than 13 months since we have seen these levels on the index. So clearly a very, very strong day as far as the equity markets are concerned, Santo.
Well, and the key things to keep an eye out for, CJ?
Well, Santo, of course, the most actually in terms of economic data, there will not be much today, largely down to the fact that the US markets are shut today on account of Thanksgiving holiday. So clearly, you will not have much cues from Wall Street tomorrow morning. So that is one thing. And on the economic front, tomorrow, of course, a very important data point in terms of Germany's Q3 GDP data. That will be coming out tomorrow during afternoon after once the European markets open. So that could sway sentiments overall. But it seems like tomorrow there will be a little less of a trigger for our markets from global markets, given the fact that US market will be shut.
Well, and with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching and also sending in your queries. Continue to do that, and we'll try to answer them whenever we can.
And guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, there is only one place to be, moneycontrol.com. We'll catch you again live tomorrow morning at 9 a.m. Till then, have a great day.